We're speaking with somebody who has been on Shark Tank and has survived the sharks. And not just that, is now successfully running his own venture in the retail space, manufacturing dry erase sticky notes. Anthony Franco, CEO and founder of MC Squares, used to be a serial tech entrepreneur and now has told me offline he is staying away from tech. We're going to be talking to Anthony about the retail sector and how he survived the sharks and has made it. Welcome to Kitco, Anthony.
Thank you for having me. Thank you so much.
MC Squares, I'm guessing your company has nothing to do with Einstein and special relativity.
Well, we did name it as a hat tip. We say we make ingenious office products, so a little bit of play on words there. But no, we actually make dry erase products that help you get the good stuff out of here out into the real world.
Can you show us one of these products? What does that actually look like?
So we have 40 different SKUs. This is by far our bestseller. They're little dry erase sticky notes that have it doesn't feel like anything, but there's a microsuction layer on the back, so it sticks to anything shiny. Okay. And it's a dry erase front. And these things will stick to glass or stainless steel fridges or whiteboards or anything shiny, and they can be reused 2,000 times a piece. So a single 6-pack of these things replaces 12,000 paper sticky notes.
I want to learn a little bit about yourself and then talk about the retail landscape and then, of course, Shark Tank. Now, you have worked in tech before. You are no longer, would you call this company a tech company? I mean, when you first told me this is a dry erase board, I thought this was just like magnetic, digital. That was really cool. But I mean, this is it's still very cool, but I don't know. I'm missing the digital aspect here. Help me out.
Yeah, my background is in tech. I founded and sold 4 high-tech software companies. In fact, I'm a builder, so you probably don't know who I am, but you've probably touched a piece of software that I've created. So we've built software for 40 of the Fortune 100 companies. Oh, wow. In my last company, when I sold it, I wanted to take that interesting scale and a repeatability of software and bring it into the physical world, into manufacturing. So when you ask, are we a technical company? We're highly technical in using advanced manufacturing capabilities. Yes. We manufacture most everything ourselves, but we're making products that are really simple to use. In fact, there's no learning curve. There's purposefully no tech, because that's where I found in my previous companies, that's where the really good stuff happens, right? When you're writing something, when the best ideas come out with the mark of the hand, that's where they start. Mm-hmm. And so I wanted to be part of that process, and that's what MC Squares is about.
I've been watching Shark Tank for many, many seasons, even since I was in high school. So I'm curious as to how you pitched this company to the sharks. They've seen pretty much everything, and I'm guessing I haven't seen this particular episode. I have to admit, I'm sorry I missed it, Anthony. But I'm guessing one of the questions is why the sticky notes business of all things.
So when think about it, first of all, it's a really interesting business. It feels like a commodity business, but if you think about dry erase and whiteboards and paper sticky notes, everybody uses them. So from homes to schools to offices, we have customers in all kinds of different verticals, and that makes it exciting as a business owner. But also, like I said, that thinking process and communicating process. Whenever I used to run design thinking workshops, the real work got done in front of a whiteboard. And so one of the problems that I was having is getting the quiet and cerebral in those meetings to share their ideas. So I built an iPad app, being a tech nerd, and handed iPads out to everybody, and it failed miserably. And the thing that worked is I started carving up little handheld whiteboards and handing them around the room. And it was like magic how the ideas started to flow and build on one another. So I thought, that's a real fun company, a real fun product, and maybe I can build a company around it.
Yeah, is this mostly businesses that are buying this product, or is it end user retail consumers like me who might be interested in this product?
So most of when we started, we actually started selling to educational institutions. And really kind of ground our teeth there. And in 2018, we switched to self-manufacture and started making consumer products and started selling on Amazon. And that's really where our company has exploded. We've grown 400% year over year for the last couple of years. Shark Tank certainly did not hurt that, but we're still growing beyond the Shark Tank piece of it. So we're primarily a B2C retail e-commerce company, but haven't even yet started to explore selling into enterprises yet. We know there's a big business there, but we're so focused on B2C that just haven't had time to focus there yet.
Yeah. Do you think with the COVID pandemic changing sort of the work from home environment, do you think that this business has a place in our new economy?
Bluntly, I'm not sure if we've been growing because of or in spite of the pandemic.
Your growth rate has been tremendous in the last year. I wonder if there was a correlation there.
Yeah, but it's the same growth trajectories that we had the year before as well. So
right.
You look at our line, the growth chart, and it hasn't changed. It's that same line going up and to the right. So I'm not really sure. I do know that our Amazon business has taken off, just like a lot of e-commerce companies have. But if you look at the mix of our customers, it's about 80%. It's about 20% business and 80% undefined. So I think some of our customers are buying for their home office, and some of them are just business customers replacing their paper sticky notes.
Well, do you think stationery products as an industry, as a sector as a whole, are more or less recession-proof? Do you think demand for sticky notes is sticky, so to speak?
I like the pun there. Yeah, it's part of what I like about this business is its optionality, right? So it does. Everybody needs sticky notes, and everybody likes writing with not everybody, but a lot of people like writing with the mark of a hand and thinking that way, and leaving notes and reminders. But also, it's one of those things that you continually buy: dry erase markers and sticky notes and personal whiteboards and cleaners and that kind of stuff. And all of those, we play in all of those markets.
And how did you, when you started this business, you must have thought, okay, well, there's already established box stores and businesses out there making sticky notes, Staples, for example. How would you plan to compete with these guys, established businesses? They're big.
Well, believe it or not, we hold 14. Well, we filed 14 and have been issued 7 patents.
Wow.
And we have material exclusivity on these sticky notes that have the bubble bond. So we have some pretty good IP protection and a good moat around that. Also, there's nobody else doing what we're doing.
What makes your sticky notes different? Well,
first of all, they're dry erase, and we're the inventor of the dry erase sticky note. But it's patent pending, and the backing of it, there's no adhesive on the back of this. It sticks to anything shiny, and that makes it really interesting because it's super reusable. If it gets dirty, you can wash it off. So the reusable sticky note, it's like one of those things that you hear it and you're like, why didn't I think of that, right? But it took us a lot of engineering to get to this point, and to make it work the way it does. And that we manufacture it here in the US, and that because of the techniques that we use to manufacture it, we can make things faster, better, and cheaper than if we were to import items like this from overseas.
Okay.
So we have good margins, and we have some protectability around the IP.
How did you get on Shark Tank? What was the process like?
Daunting. So 35 to 40,000 companies try out for Shark Tank every year.
Yeah.
1,000 of those make it to what they call vetting, where they vet the company and put them through a due diligence process. 158 of those companies film, 88 air, 50 get a deal on air, and 28 of those deals close. So if you think of that, it's 0.08% of the companies that try out actually close a deal with the Sharks. It's a fairly rigorous process, really rigorous on due diligence. I mean, more due diligence than you would ever see from a typical investor even.
Right.
And try, like, they care very much about the product. They also care about your backstory, and they
Sure.
care about if you're a good person. Like, they want people they like on the show. So
Sure.
or at
Sure.
least if they can cast in a certain role, right? So it
I've
was,
seen some pretty funny deals on Shark Tank that just failed miserably. I mean, obviously yours was one of them. I wonder if the producers vet these companies out, say, this company is going to fail. This is going to make for good entertainment. Let's just have them on anyway. I wonder
yeah,
if
the
that's
American. Yeah, that was my biggest concern, right? From my perspective, they cast you either in one of three ways: the
yeah,
villain, the fool, or the hero, right? And I
yeah.
was like, I think I could take the villain piece. I don't know if I could take the fool. Like, I don't know if I could, if my ego could handle that positioning. But because of my backstory, it turned out to be a really good episode for us.
I've seen some pretty diverse. I've seen a diverse array of different products that have made it through Shark Tank. Yours is quite unique as well. How did you convince sharks to buy a sticky note company? They've invested in a lot of crazier things. I mean, this is what was the pitch there? How did you make this sexy?
What we did is we blew. First of all, I wore this really unique jacket.
Yeah.
That had Post-it notes or sticky, colorful sticky notes painted on it.
Right.
And it was kind of I always get asked about the jacket. When we shook hands on the deal, part of the deal was I gave Kevin O'Leary the jacket as part of the deal. I don't have it anymore. He has it.
Okay.
We also talked about the environmental impact our company is having by saving billions of sticky notes out of landfills, and they like good, strong companies with good fundamentals. We have that. We have great growth. Our margins are great. So it wasn't. The problem that I had is we have so many products. And I tried to show the sharks the depth of our company with all the products, and it was a little overwhelming for some of them. But Kevin O'Leary liked our margins, liked our growth and track record. And sometimes the what feels like a boring business, like whiteboards, can actually be really sexy for investors.
Yeah, that's absolutely true. Kevin was the only shark that got in on this deal. Where somebody else? Did he partner with anybody else?
Yeah, Kevin was. Mark Cuban had to bow out because he already invested in an office products company that actually never aired. There's only been 3 office products companies that have ever aired on Shark Tank. One was on the very first season. One was Rocketbook, and they laughed Rocketbook off of the show. Like when they said microwavable notebook, they laughed them off the show. And Rocketbook's a very succccessful company, and us. Right. Those are the 3. Yep.
I've talked to Kevin actually, and his right-hand man who actually does the due diligence on these deals after the show airs. So tell us about the behind the scenes after you shook Kevin's hand, after you kind of walked away with the deal. That's just the first step of the process, isn't it?
Oh yeah. So 50 companies get a handshake deal, and then 28 actually close per season. So it's a really low percentage that close. And if you think about it, the episode, the producers do a really good job because it's true to life. The sharks have never seen you before, never heard of your company. They do a lot of due diligence to make sure that this is truly the first time that those investors see you. So, if you an hour-long process of interviewing an entrepreneur during taping isn't enough for you to know whether or not that's a good company or not. Yeah. So they need to really dig in and vet whether or not, one, you told the truth, two, whether or not what you do after airing. Do you continue to grow? Do they see the growth that they want to see? 3, do they want to work with you? And then all the other deals that they have in play. So it took quite a bit, much more so than a traditional due diligence process than you would get with any traditional angel investor. But once you have them on board, man, what a great team to have in your pocket. Kevin's been great. Alex,
absolutely,
the person you're talking about, has been phenomenal for us. So just a really great team to have as a part of our team. Yeah. Yeah,
absolutely. And one thing you mentioned that was interesting is that you manufacture your product within the U.S. Why is it important for you to manufacture it stateside? Why not go abroad where labor potentially is cheaper?
Yeah, so I think advanced manufacturing has really changed the game for U.S. manufacturing companies like us. So you have 3D printing, robotics, other operational techniques, software that make it easier to scale a manufacturing business here in the U.S. And we've designed it in a way where we can produce things faster, better, and less expensively, more cost effectively here in the US
Wow.
with a lower carbon footprint than sourcing it. So we're 30% less expensive to manufacture here than we were to source our products from China.
Wow.
Which is it's because of the advanced manufacturing techniques and capabilities that we have. That also means a couple of things. One, we can launch a product for hundreds of dollars in weeks rather than tens of thousands in months. So we can even do things like test a new product, get it out in the market really quick, see what our customers say about it, and then decide whether or not it's something we want to launch. So our strategy is simple: launch, listen, and scale if it makes sense. And then also being really close in fulfillment, so we can self-fulfill or we can fulfill out of Amazon warehouses, which gives us another distinct competitive advantage. And then as we expand globally, which is what we're doing this year, believe it or not, a made in the USA stamp means something globally. It's a stamp of quality. So it gives us some really unique advantages by manufacturing here, and we can do it at scale cost effectively because of the techniques that we're using.
The fact that you're able to scale at lower cost per unit, is that a recent trend for the US? Because I'd imagine if we had this conversation 20 years ago, your answer may have been different without this tech that we have now. Right?
Yeah, I think it does require the right mentality around being very open to new technologies and new techniques in your manufacturing process and being able to really leverage. So there's a lot of great automated machinery out there, but there's also a gap between knowing how to leverage that technology from a skills perspective to its full capacity. So there's still a little bit of catching up to do in manufacturing facilities. But yes, it absolutely is a game changer for a tech savvy entrepreneur to develop a manufacturing CPG business like ours.
Were the startup costs high for your business? Because I'd imagine the machinery must have been expensive.
Yeah. So yes, the machinery is expensive, but if you do the math, it's really more cost effective than throwing a bunch of people at the problem to do a repetitive task. It's also means people that we can hire can do higher skilled jobs by running the equipment rather than cutting our stickies or packing materials. So when you do the analysis, it's a lot less expensive to automate it compared, what the leasing of that equipment costs per month versus what the labor would cost to do the same job.
Well, overall, do you think we're going to see more manufacturing jobs in the U.S. because of advanced technologies, or should I say the advancement of technology?
Yeah, for sure. I think the commoditization of automation is a real thing, and it's happening. I mean, 3D printing is the obvious one, but there's also really interesting robotics companies that are launching that bring the price down for example, for a packaging robot down from $250,000 to tens or even thousands of dollars per robot. So it is becoming very much more approachable for earlier stage startups to adopt these techniques and bring some of the manufacturing jobs and manufacturing skills back home. It also, it lowers the carbon footprint. Not having to ship things overseas, it matters.
Well, the manufacturing process for your products, what percentage roughly would you say is completely automated by machines?
Nothing is complete. So in other words, you don't put a raw material in and a product comes out in a package. So it definitely requires labor to do it. What it does is it allows us to scale a lot more rapidly without having to worry about scaling up the personnel to do it. Mm-hmm. So we can make stickies faster with some automation involved rather than having people manually cut these things and laminate these things individually. So that's an example. We intend to eventually get to grow our automation piece by piece and over time, and we're developing trade secrets and new techniques for that. But percentage wise, I would say 80% of our process is done by machines.
Wow. Okay. And finally, let's talk about your expansion. You are currently still fundraising, and
Yes.
tell us how you're planning to raise these funds and what you'll be using these funds for.
Yeah, thanks to Kevin O'Leary, we were actually the first company to just recently launch a Reg CF raise. So regulation crowdfunding was passed in the Jobs Act during the Obama era, and they just recently created some new laws that allow companies like mine to raise more capital than we could before. So we were the first company to raise under these new regulations, and that means that what the Jobs Act was designed to do was allow startup companies to raise from retail investors. So it used to be we could only raise from accredited investors with a certain net worth. And what the Jobs Act did was allow us to raise capital from non-accredited investors, folks that wanted to invest $200 or $1,000 into a startup rather than writing $50,000 checks. So it gives the retail investor, the everyday investor, the ability to diversify their portfolio across the stock market as well as early stage companies. We're raising right now, if you go to mcsquares.com/invest, it'll take you to our campaign page on Start Engine, where we're raising capital in order to continue our 400% year-over-year growth.
Perfect. Anthony, that was an eye-opening experience talking to you about sticky notes and the manufacturing businesses within the U.S. Thank you very much for coming on the show. I look forward to hearing from you again.
Thank you. Thanks for having me again.
Yeah. And thank you for watching Kitco News. I'm David Lin.